Do you like the idea of earning high yield dividends? What if I told you you can invest in real estate and earn income by way of monthly or even quarterly dividends? And what if I told you you could invest in real estate with a hands-off approach? Not have to worry about capital expenditures or fixing up properties, or worrying about if tenants are going to pay their next month's rent, or even filling vacancies. Instead, you can invest in a portfolio of hundreds of properties. If all of this sounds intriguing, then you are going to love today's video. Hey everyone, Mark here, back for another video. As always, everything shared in this video is for educational and informational purposes only, so please perform your due diligence before investing in any stock mentioned today. Also, if you are new to investing or looking for a great new platform, then definitely check out Webull, where they are giving away 6 free stocks valued up to over $12,000 just for signing up and investing any amount of money. You could literally open a new account and put 5 cents in it. Check out the link down in the description below. All right, today we are going to discuss one of my favorite topics, real estate investing. But it's not going to be your regular form of real estate investing, like thinking of a single family house that you're going to rent out or a duplex. We are going to take a more hands-off approach, and we are going to be investing in real estate by way of REITs, or real estate investment trusts. If you are already a REIT investor, then let me know down in the comments section below what some of your top REIT holdings are. I would love to hear those. But if you're new to REITs and just trying to understand more of what REITs are, then let me do a quick overview to help you understand more. Real estate over the years was really just available to wealthy, or it was known as something that was only an option for wealthy people. But once REITs were introduced back in 1960, that is the first year in which Congress started recognizing REITs and for what all they are. And it has formed a position in which you, any type of investor, can now invest in real estate by way of REITs. REITs take a lot of the complications out of investing in real estate and throw them right out the door. Why investing in real estate is a good idea? It is a proven asset class that is appreciated through the decades. Also, real estate gives you a great, and especially REITs, give you a great outlook on cash flows. A lot of leases that REITs have are 5, 10 plus years down the road. So you get a great understanding of what the cash flows will be for that company moving forward. Think of something like Apple or Amazon. It's hard enough just trying to model what the cash flows will be in the next year or two, let alone 5 or 10 years that you can see with REITs. So let me quickly discuss what REITs are and how they differ from regular stocks. REITs are companies that own or finance income-producing real estate. REITs must follow a list of requirements in order to maintain their REIT status, which we will look at in a second. Also, REITs must be a corporation, and they are not taxed at the corporate level. That is one of the main benefits from a company standpoint on what a REIT is. Like I mentioned earlier, investing in REITs is a great and easy way to invest and gain real estate exposure. It's also going to add real estate diversification to your portfolio. Think about it. When you invest in a rental property, a single family home or a duplex or triplex, you just have that one property. But when you invest in a REIT, you are investing in a company that owns hundreds of different properties across the entire US, and some of them have properties across the entire globe. REITs come in all different sectors. You have specific REITs that are focusing on properties in a specific sector. You can find REITs in the retail sector or cell tower sector. You can find data center REITs or self-storage REITs. You could also find warehouse REITs, industrial REITs, office-focused REITs. You can find REITs that are in the hotel sector or even lumber. Yes, lumber, timber REITs are out there, as well as mortgage REITs focusing on mortgage-backed securities and stuff like that. You have mall REITs, apartment REITs, and healthcare REITs. There is a whole slew of different types of REITs that you could focus on and find something that excites you for your portfolio. Next, let's focus on the specific requirements that you have to follow in order to maintain REIT status. Remember, if you are a REIT, you do not get taxed at the corporate level. So let's look at these very specific REIT requirements. You must invest at least 75% of your gross assets in real estate. You must derive at least 75% of your gross income from real estate related activities. Think of rental income or interest income. And then here's the big kicker, that you must pay 90% of your taxable income out to shareholders in the form of dividends. This is one reason why you will see REITs that have high yield dividend payouts. You must be a corporation. You must also have a board of directors. You must have at least 100 shareholders and have no more than 50% of its shares held by 5 or fewer individuals. Did you know that over the past 20 years, equity REITs have outperformed that of the S&P 500? REITs are a total return investment, which is another great reason that you should look to add REITs to your dividend portfolio. Looking at this chart here, you can see the 20-year average annual total return for various asset classes. Down at the bottom is the Nareit All Equity REIT Index, and you can see that over the past 20 years, the average annual total return is over 12%. You can see that the S&P 500 is up near the top as a little over 10.3%. REITs have also been making an impact on the S&P 500. You're seeing more and more added to the S&P 500 each and every year. And looking at this chart here, you can see how the number of REITs and their market caps and weight within the S&P 500 index has grown over the past 2 decades. Next, let's take a closer look at REITs by the numbers. REITs own more than $3.5 trillion of gross assets here in the U.S., owning approximately 503,000 properties. There are 29 REITs within the S&P 500 and 213 REITs within the All-REIT Index. The All-REIT Equity Index has outperformed the S&P 500 in 15 out of the past 25 years with a trailing annual average 25-year return of 10.5%. The average dividend yield for the All-REIT Index is 2.9% compared to the S&P 500 having a yield closer to 1.5 at the time of this recording. There are 12 sectors of REITs to choose from, many of which we went over earlier. So as you can see, REITs are a very fascinating investment, and it's a hands-off approach. You don't have to be as hands-on as if you were investing in private real estate on your own. You don't have to worry about the capital expenditure or filling the vacancies or worrying about rent increases. All that is taken care of, and you are investing in a portfolio of hundreds of different properties rather than just the 1 or 2 that you may be able to start with from the get-go in private real estate or investing on your own. Now that you have a better understanding of what a REIT is, let's take a look, in my opinion, of 3 must-own REITs, all of which you will find in my dividend portfolio. The first must-own REIT is Realty Income, stock ticker O. Realty Income is also known as the monthly dividend company. And this is because they pay a monthly dividend. Remember from the get-go, I said that you could be earning dividends from investing in real estate on a monthly or quarterly basis. If you invest in Realty Income, you're going to be earning a dividend payment each and every month. That's why they are called the monthly dividend company. Speaking of dividends, the company has a very strong track record of 27 consecutive years of rising dividends. Not only are you getting paid every month, but you're getting increasing dividends each and every year. In fact, the company increases the dividend a little each and every quarter, having done so now for 98 consecutive quarters and counting. Realty Income is also a member of the Dividend Aristocrats list, since it has over 25 years of consecutive dividend growth. The dividend is backed by a very strong diversified portfolio of properties and tenants. The company has a strong A-rated balance sheet, which gives them a major advantage when it comes to acquiring new properties at low interest rates. Here is a look at the company's top 20 tenants, in which you will see a lot of well-known names that can withstand any economic backdrop. Names like Walgreens, 7-Eleven, Dollar General, FedEx, Walmart, Tractor Supply, and Home Depot, just to name a few. Roughly 25% of total revenue comes from the combination of grocery stores, convenience stores, and dollar stores within the Realty Income portfolio. The company also trades at a blended FFO multiple of 19.6 times, and over the past 5 years, they have traded closer to 21.4 times. Realty Income currently pays a dividend yield over 4%. So you're getting that dividend increase each and every quarter, And over an annual perspective, they have increased that dividend now for 27 years and counting. This is a must-own REIT. When you think of REITs, Realty Income is one of the gold standards. So definitely take a closer look at Realty Income when looking to add REIT exposure to your portfolio. The second must-own REIT is Prologis, stock ticker PLD. Prologis is the largest warehouse REIT in the US or on the markets today. And again, it is another very well-run REIT. Something you will notice that all three REITs that we discussed today all have very strong balance sheets that have an A-rated balance sheet. This gives them an enormous advantage out in the market, especially when making acquisitions. PLD is a REIT that I have added to in my portfolio in recent months. They have had a strong pullback over the past few months, and a couple of reasons for that. The greater market was selling off, which impacted every industry. Amazon also made some comments in their last quarterly earnings call that related to them having too much legacy warehouse space. And with Amazon being the largest tenant in the PLD portfolio, shares were hit even harder. PLD also announced the acquisition of fellow warehouse REIT Duke Realty, which investors were skeptical of due to where the market was heading and is currently heading, with a pending recession on the horizon. Regardless, this has given investors a great opportunity to add shares of a high-quality REIT like PLD. Warehouse REITs are vital to the growth of e-commerce. So if you are a big believer in e-commerce, especially something like Amazon, it is still such a small piece of the pie that PLD and warehouse REITs are definitely going to benefit as e-commerce and retail sales return back to their growth mode. Prologis has 4,372 properties as of Q2 2022, which they released this week. That equates to over 1 billion square feet of space to lease. Here's a look at how the company has increased FFO and AFFO over the years, as well as the year-to-date results through 2 quarters, which has them on pace to make new highs yet again in 2022. Also, here's a look at the company's top 25 tenants, which make up 20.6% of total revenue. Amazon makes up 4.8% of the total revenue itself. PLD currently pays a dividend that has a yield of 2.65%, and they have grown that dividend for 9 consecutive years now. Although they do not have the growth history that Realty Income might have, they do beat them when it comes to annual dividend growth. Over the past 5 years, PLD has increased the dividend over 10.5% per year. Currently, shares of PLD trade at a forward FFO multiple of 23.1 times, which is below their 5-year average of 24.2 times. Again, if you believe that e-commerce is going to continue to grow and be a greater share of total retail sales, then definitely take a look at PLD, as I believe it is a must-own REIT moving forward. The third and final must-own REIT that we will talk about today is Public Storage, stock ticker PSA. This REIT does not need much introduction. Chances are that you have driven by a public storage facility before. I know here in California, I drive by them on a daily basis. It's almost like you're for sure going to drive by a public storage unit, and you're probably going to drive by multiple Starbucks locations. Self-storage is a great segment that works in a slow economic environment as well as a fast economic environment. The fact of the matter is, especially Americans here in the US, they love to collect things, whether the economy is booming or whether the economy is slowing. If it's slowing, sometimes you'll see a lot of families decide to relocate or they'll downsize, but they don't want to get rid of their things, so they put them in a self-storage unit, most likely a public storage unit. Public Storage is a name that has been around for 50 plus years. It's similar to other great REITs that we discussed today. PSA has an A-rated balance sheet. In terms of the portfolio, PSA has nearly 2,800 properties within 39 states that are leased out to 1.8 million customers. There's been a lot of talk of self-storage having a huge supply issue that could impact the likes of a Public Storage. But in the company's most recent quarterly filing, the company reported revenue growth of 15%. As revenues have grown, you can see that FFO per share is growing as well over the past decade. Shares of PSA currently pay an $8 dividend per share, which equates to a yield of 2.59%. Year to date, the stock is down 13.4%, and in terms of valuation on a forward-looking FFO multiple, it is trading at 19.9 times, and over the past 5 years, Shares of PSA have traded closer to 21.2 times. Definitely take a look at Public Storage for a must-own REIT for your dividend portfolio. So there you have it, folks, 3 must-own REITs, and we also covered what REITs are and why they are a great investment, a hands-off approach in order for you to gain real estate exposure into your dividend portfolio. I hope you enjoyed the video, and if you did, please click that thumbs up, as that's huge for the algorithm and the growth of this channel moving forward. Also, let me know in the comments down below some of the REITs that you currently own or that are at the top of your watch list. With that being said, again, I hope you enjoyed the video, and we will see you next time. Take care.